cents an ounce, up 10 cents an ounce. Let's get some thoughts on the market now with David Brochu of Strategic Point Investment in Providence. Thank you for joining us this morning, David.
My pleasure.
And we saw like a bit of a pullback, but not anything all that serious, yes?
No, not all that serious. We're dealing with two different markets right now. There's the day-to-day casino that is the stock market, and it really is that right now. There's no fundamental underpinnings to what's going on. It's a trader's market, and trading is a nice way of saying a gambler's market. So that looks to be continuing. That looks like that will continue on for a bit here. We've got some momentum. The underpinnings of all of this, what's underneath all of this is horrendous, and we fear it will end very badly.
How so?
Well, you have to look at what we're doing. We're doing exactly what we did to get us here in the first place, and that is we're reflating. The government is printing tons and tons of money, pushing it into the system. Banks have gone back to their old ways of trading bonds and levering up those bonds. We have not seen a cleanup of the toxic assets. All we have done is treated the outward symptoms of the economic problems that we faced. Now, that is step one. That's stabilize the patient, and I think Bernanke knows that, and he spoke about that. Step two is to right the problems. And unfortunately, I don't believe the political will is there, and I don't believe Bernanke will be there to take the next step, which is going to be the painful step that we Americans never seem to want to take.
And you predicted something real bad at the end in your comment. I think another big market decline. Is that what you mean?
Well, I think a long market decline, meaning a very long period of very, very slow growth and very difficult environments. We are not. We don't like pain in this country, so clean mess up is something we have continued to put off. We keep kicking the can down the road, and we're doing it again. We're just pushing it down the road. At some point, we're going to have to take all this leverage, all this debt, all the money that we're printing out of the system and get back to some kind of basic investing and infrastructure building. And I don't mean infrastructure in roads, I mean of the overall economy. If that doesn't happen, we're in for a doozy, one that makes the last one look small.
Oh, my. So what are you telling your clients to do?
Well, we have to be careful. I mean, the bulk of the money needs to be invested in very conservative, very, very solid places, irrespective of whether it's equities or fixed income. And then if you've got the stomach for it, a little bit of trading, a little bit of gambling, if you will, because that's what it is not out of the question. But if one has reached their financial goals, keep it conservative. Don't risk the money.
Well, there's got to be some bright spots. Municipal bonds, maybe. For instance, the Rhode Island Student Loan Authority a couple weeks back just sold some bonds, and the interest rates were pretty good, tax exempt, between, I think, 4.5% and 7%. 7% tax exempt.
Absolutely. We love municipal bonds. Whenever you can get some high-quality municipal bonds, take them, because they're very, very attractive. Interest rates are going to go up. They're going to go up at some point quite dramatically, so that's attractive. Some of the government bonds, TIPS, also look very attractive. Even the 10-year Treasury. We have zero inflation, 3.5%. After inflation, that's a heck of a return. So there's a lot. There are investments out there. You just have to adjust what it is you expect from those investments.
David Brochu, thank you for joining us this morning from Strategic Point. That's our business report for this Thursday, the 23rd.